and we are continuing with the financial management model and the balance sheet. The balance sheet is one of the most used financial reports and displays what your farm business owns and what is owed. The difference represents your claim to assets or net worth in your farm business. The balance sheet lists assets, liabilities, and net worth, and represents a snapshot of the farm business as of a certain date. The balance sheet is also known as the net worth statement or statement of financial position because of the importance of net worth with respect to representing your farm business's financial position. The balance sheet is referred to as such since it adheres to the accounting formula assets equal liabilities plus net worth. Let's take a look at each of the parts of this equation. Assets are items owned by your farm business that have value. Liabilities are financial obligations or debts of your farm business that are owed to others. Net worth, also known as owner's equity, is the value of your farm business owned and free of debt. The balance sheet is structured into two columns, assets on the left side with liabilities and net worth or owner's equity on the right side. The chart on this screen provides examples of current and non-current assets and liabilities of a farm business. Assets are classified on the balance sheet as to their useful life in the farm business. Current assets will be used or sold within 1 year or within the normal operating cycle if longer than 1 year. Current assets may include cash, prepaid expenses, supplies, market livestock, grain, feed, or livestock inventory. Non-current assets are held for more than 1 year. In agriculture, non-current assets may be further divided into intermediate assets and long-term assets. Intermediate assets are owned more than 1 year and less than 10 years, such as breeding livestock, machinery, equipment, and vehicles. Long-term or fixed assets are owned more than 10 years, such as buildings and land. Liabilities are classified similar to assets. Current liabilities are due within 1 year, such as accrued interest, accounts payable, bills, credit card balances, short-term operating, and principal due within 1 year on non-current loans. Non-current liabilities are due beyond 1 year. Like assets, non-current liabilities may be further divided into intermediate notes, such as for livestock and equipment financing, and long-term or fixed notes for real estate financing. In addition, liabilities may include contingent liabilities, such as for tax or legal debts, and term liabilities related to redeemable shares of a business. In agriculture, the non-current assets and liabilities are divided into intermediate or long-term to determine whether or not the debt is structured consistently with asset life and to evaluate the overall balance sheet structure. The value of the assets will always balance or equal the sum of the liabilities and total equity or net worth. Total assets are the total amount of stuff used in the business to make profits. Your total liabilities are how much of that stuff is financed by the bank. And your total equity is how much of that stuff is financed by your own money. Remember, total assets equals total liability plus total equity.